All right, let me tell you about a pretty profound book I've been diving into recently. The Changing World Order: Why Nations Succeed and Fail by Ray Dalio, the founder of Bridgewater Associates. This isn't your typical business book. It's a deep dive into history, analyzing the rise and fall of world powers over centuries. Dalio figured out that there's a recurring cycle of world orders, and even though future events might look different, they often rhyme with what's happened before. By studying 500 years of history, he noticed that the flourishing and decline of empires tend to follow similar patterns. So what's inside this fascinating book? 1. Introduction. Why study world order cycles? Dalio explains that the world goes through cycles of changing world orders, driven by debt and economics, debt accumulation to financial crises to reforms, internal and external conflicts, wealth gaps to political polarization to wars, and innovation and technology. New tech leaders often rise to dominance. He kicks off his study with a pivotal moment in 1971 when the U.S. defaulted on its debt by unlinking the dollar from gold. Back then, gold was the real money for international transactions, but the U.S. had been printing paper money beyond its gold reserves. People started rushing to exchange dollars for gold, so President Nixon temporarily suspended the dollar's convertibility to gold. Dalio expected the stock market to crash, but instead, it surged almost 25%, which really surprised him because he'd never seen a currency devaluation before. His research into history revealed that a similar event happened in 1933 during President Roosevelt's time, with the same outcome. In both cases, unlinking the dollar from gold allowed the U.S. to print more money, which depreciated the dollar, but caused stock, gold, and commodity prices to soar. Dalio learned a crucial principle. When central banks print a lot of money to alleviate a crisis, buy stocks, gold, and commodities, because their value will rise while the value of paper money will fall. He points to this happening again in the 2008 subprime crisis and the 2020 COVID-19 crisis, and believes it'll happen again in the future. What spurred his most recent deep dive? Dalio points to three big factors in recent years. Many countries accumulated so much debt that they had to print massive amounts of money even with interest rates at zero. Intense internal conflict erupted due to widening wealth gaps and differing values, leading to populism and political polarization. Increased external conflict between a rising power in China and a leading power in the U.S. He noticed that all three of these events occurred simultaneously many times in the past, often leading to changes in both world and internal orders. The last time all three converged was between 1930 and 1945. 2. The big cycle of world powers. Dalio defines a world order as the system of governance that allows people and countries to operate together. This includes both domestic orders, like a constitution, and international orders, like treaties. These usually change after a war, civil or international, when a new power overthrows a weak old one. For example, the U.S. domestic order was enshrined in its 1789 Constitution after the American Revolution. The current world order, the American world order, was established after the Allied victory in World War II, with the dollar becoming the world's leading reserve currency through the 1944 Bretton Woods Agreement. Dalio studied the 10 most influential empires over the past 500 years, including the last three major reserve currencies, the Dutch guilder, the British pound, and the U.S. dollar. He even went back to 600 A.D. to understand China's patterns. These cycles typically last about 250 years, with critical transition periods lasting around 10 to 20 years, often marked by conflict. He uses 8 metrics to gauge an empire's strength: education, inventiveness and technology development, competitiveness in global markets, economic output, share of world trade, military strength,
the power of their financial center for capital markets, and the strength of their currency as a reserve currency. Averaging these indicators helps to show which countries are strong and their likely trajectories. Dalio divides the big cycle into three phases: the rise, the top, and the decline. The rise. This phase begins after a major conflict that establishes a new power, followed by a period of peace and prosperity. A new revolutionary leader comes to power and builds a credible system, leading the country to wealth and power. There's an emphasis on strong education, fostering knowledge, skills, good character, civility, and a strong work ethic. Development progresses from basic goods to new innovations and technologies. For example, the Dutch were highly inventive, creating a quarter of the world's significant inventions, including advancements in shipping and pioneering capitalism to raise capital. They also started the first public company, the Dutch East India Company, and the world's first stock market. Capitalists, the government, and the military must work together. The Dutch East India Company, for instance, received a trade monopoly from the government and had its own military. The British East India Company and the U.S. military-industrial complex operated similarly. As a country becomes the largest trading empire, its currency becomes the preferred medium of exchange and wealth storage globally, becoming the world's leading reserve currency. Examples: the Dutch guilder, the British pound, and the U.S. dollar. The top. At this peak, while strength persists, the seeds of decline are already sown. The population in wealthy countries will have higher wages and become less competitive compared to workers in other countries willing to work for lower wage. Other countries also copy the leader's technology and methods, reducing the leader's competitiveness. People start to work less hard, focusing more on leisure and luxury, which can lead to decline. Values shift from the generation that fought to the one that inherited wealth, making people weaker and more fragile. Financial bubbles expand as people bet on good economic times and borrow too much. The wealth gap between rich and poor widens. The rich use resources to solidify their power, like giving better opportunities to their children and influencing the political system. Discontent among the poor starts to build. Having the world's reserve currency leads to overborrowing and accumulating large debts with foreign lenders, undermining long-term financial health. The cost of maintaining the empire becomes higher than the income it generates, causing the empire to run at a deficit. The Dutch Empire, for example, overextended itself and engaged in increasingly costly wars. The British Empire faced similar issues. The U.S. has spent trillions of dollars on foreign wars and maintaining its global military presence. Wealthy countries start borrowing money from poorer, high-saving countries. The U.S., for instance, began borrowing from China in the 1980s. The decline. Decline stems from internal economic weakness coupled with costly internal conflicts or external struggles. This phase is often gradual before accelerating rapidly when debt is high and the economy is so poor that it can no longer borrow. Financial bubbles burst, causing significant internal hardship. Governments must choose between defaulting on debt or printing massive amounts of money. Most opt for printing, which devalues the currency and causes inflation. Examples: the Dutch guilder depreciated after financial crises and wars. The British pound depreciated after World War II. The U.S. has faced 3 debt and money printing cycles, QE, since the 1990s: the dot-com bust, the subprime, and the COVID-19 crisis. When the economy is bad and living standards decline, wealth gaps and differing values lead to intensified internal conflict, including racial and religious divisions. Populism emerges. The left wants to redistribute wealth, the right wants to protect it. Taxes on the rich may rise, leading the wealthy to move their money to safer places, reducing government tax revenue and hollowing out the internal system. Democracy is challenged, and populist leaders often rise to establish order. Severe internal conflict leads to revolutions or civil wars to redistribute wealth. This can be peaceful, like Roosevelt's New Deal, or violent, like the French, Russian, or Chinese revolutions. Internal weakness makes the empire vulnerable to rising external powers, who are increasingly likely to challenge. Self-defense requires massive military spending, while the internal economy is struggling. When holders of the declining empire's reserve currency and debt lose faith and sell off that currency, that's the end of the big cycle. Examples: the run on the Bank of Amsterdam after Dutch defeats in war led to massive money printing and the guilder's depreciation. The UK faced a depreciating pound after World War II. Dalio notes that the U.S. hasn't yet reached the point of a massive dollar sell-off, despite enormous debt and extensive money printing. Ultimately, new winners collaborate to restructure the losers' debts and political systems, creating a new world order.
3. Money, currency, and wealth. Reserve currencies typically have an average lifespan of about 75–100 years before being replaced. Signs of the dollar's potential decline include the U.S. printing too much money after the 2008 crisis and COVID-19, as well as China pushing the yuan in global markets, like the deal with Saudi Arabia to buy oil in yuan. Dalio stresses that holding cash is not the safest asset because all currencies eventually depreciate or vanish. Central bank money printing, quantitative easing, or QE, devalues currency and causes inflation. When inflation occurs, the value of cash drops, and people tend to shift their wealth into assets like stocks, gold, commodities, real estate, or even cryptocurrencies, driving up their prices. This reflects a lack of faith in the currency itself. When the primary reserve currency loses credibility, the empire's borrowing power diminishes, leading to collapse. 4. War and power shifts. Wars often erupt when an old power refuses to accept the rise of a new one. Historical examples include the Peloponnesian War and World Wars I and II. Currently, rising tensions between the U.S. and China in the South China Sea and over Taiwan are examples of potential external conflicts. 5. Lessons from history. Factors for a nation's rise include good education, innovation, and free trade. Examples: Germany's growth in the 19th century through innovation, or China after 1978 with free trade. Factors for a nation's fall include a corrupt ruling class and a polarized society. Examples: Spain in the 17th century with corruption, or the U.S. today with social fragmentation. 6. Conclusion: the future of the world in the 21st century. Dalio offers 4 possible scenarios for the U.S. China relationship. 1. The U.S. revitalizes its power through innovation and reform. 2. A new Cold War emerges, dividing the world into 2 blocks. 3. China becomes the new superpower if the U.S. declines like Britain after World War II. 4. Global chaos if no clear leader emerges. Dalio's advice: for investors, diversify risk, especially by investing in emerging markets. For governments, reduce inequality and invest in technology. Dalio concludes that the most important thing for a nation's sustainable success is to earn more than they spend and treat each other well. Other factors like education, innovation, and competitiveness are just ways to achieve these 2 main goals. He compares assessing an empire's health to checking a human's vital signs, with the 8 power metrics serving as those indicators. A nation's greatest war is often the battle with itself in making difficult decisions to sustain its success. Dalio also offers advice for individuals. Understand the worst-case scenario and find ways to manage the risks. Diversify your risk. Don't put all your eggs in one basket. Seek long-term gratification over short-term gains. Surround yourself with smart people to test your ideas and learn from them.